All right, you're tuning in to Financial Fitness Northwest live on 1150 KKNW, where we help you navigate the mortgage and real estate market with expert advice from knowledgeable and trustworthy industry professionals. We are dedicated to provide you with the tools you need to make informed decisions on today's events and how our local economy is affecting your buying power. And now, Patricia and I, we're the experts. And we're going to talk through what it takes to qualify for a home loan, things you may not be aware of, and hopefully shed some light on, how close you are really to being a homeowner.
That's what we're going to talk about.
Yeah.
And we thought this would be a good topic because a lot of times people think that they're pre-approved, in their own minds. Maybe they haven't really gone through the process, but they think that they are good to go. And there's just so many moving parts to a home loan. And it's really important to go through that pre-approval process to make sure that you uncover anything that needs to be dealt with up front so you don't have surprises and you can move to a smooth closing. And that's what we do.
That's right. I mean, even if you're wanting to buy a home now or a year from now or 3 years from now, really the first step is applying and sitting down with your mortgage professional, which is us, and going through, because what we've experienced is a lot of times people don't think that they're ready to buy a house when in fact you're a lot closer than you think, or you're ready right now. So you wouldn't find that out unless you talk to us.
You wouldn't find that out. Or the other side of it is that you think you're ready and you find out that maybe you weren't. You needed to do a couple of things. And so the sooner you work on getting your pre-approval done, the sooner we address those, and then we get you ready.
That's right. So we wanted to start with talking over some misconceptions that people have about what they have to do to qualify for a home. And so one of them that we hear all the time is people think that they have to pay off their debt. I got debt. I have a credit card. I need to pay down debt before I can buy a house. Well, that is truly not the case in most times.
Right. And a lot of people will think, maybe you have a balance of $8,000 on your credit card.
Mm-hmm.
But we don't consider that you owe $8,000. We consider that you have a $100 payment.
Right. It's just the minimum monthly payment that goes against you for qualifying. And so when you're working really hard at earning money to pay down that debt versus saving that money so you have money for your closing costs and down payment to buy a house, you're just sort of setting yourself further behind in the buying process.
Yeah. You can't really save as fast as you need to catch up to appreciating home values and also to coming up with that down payment, You don't need as much money down, which we'll touch on that too, as you might think.
That's right. So basically, to summarize on that, you don't just go down paying down debt, take an application, talk with your mortgage professional, and then it might be a balance. You might have to pay down something, but don't do anything until someone goes through all of your finances and advises you on what steps to take to get you closer to buying.
Yeah, and the important point of that too is that you don't want to spend, you only have, if you have so many resources, you want to make sure that you use those in the best possible way to put you in a strong position to purchase. And if you just go and start spending your reserves and paying off things that maybe you don't need to, then you're taking away from your down payment and your opportunity to qualify for a bigger purchase price. So
that's right.
It's important to talk to your lender.
Yes, your lending team. So,
Riley Johnson
at Caliber Home Loans.
Yeah.
Okay. So next is student loans.
Student loans. That's kind of a biggie.
Mm-hmm. People think, I have a bunch of student loans. I can't buy a house. Not true.
Not true. No, because we're only going to use the minimum payment of that student loan.
That's right.
And it's going to vary depending on the loan program. So when you come and meet with us, we can look at that and advise you of what is going to be the best loan for the amount of student loans that you have.
That's right. And then also, a lot of times people think because their student loans are deferred that now's the time to buy. My loans are still deferred. Well, if you're not in school and you can't prove that your loans will be deferred for 3 years, you do have to qualify with the payment.
Right. So that's one of those things that can trip you up when you think you're good to go.
Yep.
You want to figure that out in advance.
Because you'd have to, you have to, the process to go through the school and, your loans and get them amortized into payments and all that takes time. So you need to do that before you start house shopping.
It does. And a lot of times student loans on a credit report are one thing that is like messed up more than a lot of other
Incorrect,
liabilities.
yeah.
They don't report correctly. Lots of times there's multiples. So if you do have a lot of student loans, I guess the message is talk to a lender and figure out what all that means as far as payment and your qualification in advance.
That's right. So savings down payment. That's the next one that we're at. People think, I just, this things always come up and we're like, we should talk about that on the radio because it happens just every day in our career. So just yesterday I was talking to a client and he's just hesitant about taking the application. He's like, well, I don't have 10% down. And I'm like, well, why do you think you have to have 10% down? He's like, I don't know. I just have this number in my head. And that is the case for a lot of people. You have this misconception of what you think you have to have, whether it's 5%, 20%, 10%, whatever the amount is. There's so many options that you don't really know what you have to have until you talk to a lender. And you could put as little as no money down on some programs,
Absolutely.
down payment assistance.
That's possible. Yeah, you can do that. 0 down. If you buy in a rural area, maybe you do a USDA loan. That's 100% financing right there.
Yeah.
No down payment, no mortgage insurance. That's another thing that people worry about. They're like, oh, I have to have, 20% down because otherwise I'll have mortgage insurance. Well, the reality is that depending on, you would need to talk to your tax consultant to verify the exact figures. But in many cases, you can write off your mortgage insurance depending on what your income is. And also, again, it's one of those things where if you decide you are not going to do a house until you save enough money to avoid that, you're probably never going to catch up. You're just going to get priced out of the market. And we have ways, if you do have the 10%, that you don't have to pay mortgage insurance.
Oh, yeah. There's so many options. And there's so many loan programs coming out all the time where there's no MI at different thresholds or there's MI options. You don't just have to pay monthly mortgage insurance. Or maybe you qualify for discounted mortgage insurance. It has this, negative,
connotation
yes,
with it. Yeah.
Yeah. But don't let that hold you back because the small, tiny little amount you might have to pay for mortgage insurance to get into a house now is so worth the equity you're going to receive in home ownership.
It is, and probably in a matter of, 1 to 2 years with the way that property values are going up in Seattle, you can refinance right out of that. So, it's going to be a really short-term solution for you to get you into a property and get into a positive equity position. So that's a good thing to move forward with.
And something to note is that the average first-time home buyer only has 6% down. So most people don't have 20% down on their first home. Generally, people putting down 20% gain that in equity of home ownership.
That's right. And for a first-time home buyer, there's great 3% down programs with reduced mortgage insurance.
Yep.
So you can,
we can't even cover all the programs.
We can't. There's so many things and so many misconceptions out there about what you need to do. And so we just want you to reach out and we can help guide you.
That's right. So, okay, this one. This comes up a lot. This is a long one.
Yeah.
Debt to income ratio, or your DTI, is what you hear a lot, is your debt to income ratio. How much what that really means is the amount that you have in monthly debt obligations, so your minimum payment on your credit cards, your auto loan, as a percentage of your gross income before taxes.
Right.
That's what we use to qualify. And so when a lender is figuring out what you qualify for, those are the numbers they're working with, not the total amount you owe on your debts, not your amount you take home, your take-home income. Nope, it's the total amount in your check before all the deductions.
Right. A lot of people do not understand how much money that they make, even just from an annual standpoint too,
Right.
gross income. They might look at their monthly check, but if you get paid every 2 weeks, your annual income is going to be different than what that shows. So
That's right.
we figure out the maximum income that we can utilize for you to qualify for a home.
Yeah, there's a lot of things that go into qualifying your income. So just to cover some of it, we're not going to get into try not to get into too much detail, but like if you're an hourly earner, then and you're guaranteed 40 hours a week, we just use your full amount. If you work less than 40 hours or you have a variance in your hours, then we would have to average your income based on the hours you've worked over the last year. So there's things that come into play.
There are, and I think that's probably the number one reason that you should sit down with a knowledgeable lender when you want to get pre-approved in advance of shopping for a home, because income is really, really tricky. And
Mm-hmm.
like Sarah said, if you're a W-2, it's a little bit simpler. And if you've been at your job for 2 years, but if you are a self-employed borrower, or if you get bonus income, or
If you work 2 jobs.
if you work 2 jobs, there's so many variables, and people, I would say that's probably what surprises people the most is like, what? You can only use that much of my income? Why not all this other stuff? And it's just, that's
Yeah, I think, it's like at anything. You always look at the best, right? So a lot of times when people put their income down, they put their highest paycheck, right? So, but because maybe you work overtime, once in a while. But the fact is that we're going to average your overtime, and you have to have a history of overtime. There's just so many things that a knowledgeable mortgage professional would know and can sit down and advise you on. And I think almost the latter of what Patricia said. I think a lot of times some people are thinking you can only use that because they have complicated income. And then sometimes people are just really surprised by what we can use to qualify them.
it's true. It can go both
It
ways.
can go both ways. But there's a lot of rules on commission, overtime, bonus, and those are things that you would never know, or what programs are available to you and what the guideline restrictions are. So you really need to sit down with someone.
If you work 2 jobs, you have to have a 2-year history of working 2 jobs.
Yep.
And then we can use that income.
Yeah, we
So
do that all the time, actually.
We do that a lot.
And same with overtime. You can use overtime if you have a history of having overtime. You can use and average that income over your yearly.
Yeah,
So-
and sometimes people think, oh, well, they maybe don't include that, but like we average it, maybe they had a lot one year and then one year not so much, but maybe it makes up for an extra, $200 or $300 a month, just a little bit. But
that gives
can,
you a lot of buying power.
a lot of buying power. So it can be more than you think.
Yep. And just on a little side note, when we're talking about a mortgage professional, it is really important when you're doing this kind of strategizing and sitting down with someone that is a licensed mortgage professional. It's a lot different than a bank or a credit union where they're just transactional. All we do is mortgages.
That's all we do.
All we do. And we advise, we educate, and we help prepare you for your future. And so financially. And so it's good to sit down with someone that's going to continue to work with you and have a relationship for maybe the 3 years it takes for you to get ready to buy.
Exactly. We aren't all just in for the quick deal. I mean, we really like to have the relationship with the client, during and after the transaction. So we
Right.
want to help you through, and we do like to educate. So even if you decide not to buy a house, we still love to help get you ready for when you do want to buy a house.
That's right. So potential pre-approval issues. So some things that come up that could, be an issue that you want to head off would be residency.
Yeah, because that's a big thing in our area. We have a lot of people that come into our area to work in the tech industry, and they're not necessarily U.S. citizens. They might be resident aliens. They might be non-resident aliens. Doesn't mean you can't buy a house.
Right.
We just have to make sure that you have the proper documentation, and that's going to vary a lot from one loan program to another.
Yeah, there's a lot of things that you can do to purchase now, even if you're here like on an EAD card, or we've done that. We've just recently done that. There's different loan programs for different visas. So you need to sit down and talk with your lender and figure that out. That's definitely not something that you want to wait until you find a house and try and figure out if your visa qualifies to buy.
Yeah. There are a lot of different visas that do qualify, but then there are some that don't. And it also depends on if you're looking at a conforming loan limit or if you're looking at a jumbo loan.
Yep.
Obviously, East Side, that's a lot of tech is on the East Side. A lot of the borrowers are looking in that higher price point that might be first-time home buyers. And so definitely you want to check all that out first, because the jumbo guidelines are going to be different than and a little bit more
Restricted.
restrictive.
Yeah. So, and then another barrier or issue could be child support, and touching on that. So child support is something that you can definitely use to help you qualify for a home, but you do have to, if you're receiving child support, but you do have to prove it's going to continue for 3 years.
Right. If you're paying it, you need to include that on the loan application as well.
Yeah, because it will,
It does come up.
decrease what you would qualify for. It is part of your, outgoing debts, basically. So that's a big one. We've had things just come up where someone, they're receiving child support from maybe they were never married,
Right.
and they're just someone's
It's
paying
just a
them.
casual, they just pay friendly
use that.
relationship.
Yeah.
It doesn't work. It has to be a court order. Mm-hmm. And it also has, just like any other kind of income, it has to have proof that it's going to continue. If you had child support that you've been receiving and your child is 17 years old, chances are we're not going to use it because they're probably going to be being
Yeah.
done with that pretty darn quick.
Like in a year.
in a year.
Yeah.
Yeah.
I mean, you might not be done. You'll be paying for them for a while, but
Yeah.
so that's one of them. And now credit. So we wanted to touch on credit and really, some misconceptions people have about what you need to get into a house as far as credit scores and things on your credit report that can come up and, hang you up. So
Yep. So basically, if you have as low as a 580 FICO score, you still could potentially qualify for a loan
Yep.
on an FHA.
sure can.
If you had as low as a 620, you could do a conventional loan, and a 680, you could do a jumbo loan.
That's right.
So those are kind of the basic numbers, but there are a lot of other things to consider when you're looking at your credit. It's not just your credit score.
Right. So if you had something like a judgment or tax lien, or some of the judgments we see are child support judgments, things like those. You can't purchase a home if you have a judgment for child support or tax liens.
Right.
Those have to be paid. So those are things that you can, once you're applying for a home loan, we're going to pull your credit and we're going to go through it with you.
Yeah.
We're going to
Help
go
you.
over, the things on there that need to be resolved. And maybe you think, oh, I have collections. I got to pay those collections. Well, maybe you don't.
Yeah.
So that's another thing we can advise you on. You can actually have up to $2,000 in unpaid collections and purchase a home with those outstanding.
Mm-hmm.
So those are things that, again, you don't want to just be throwing money at things thinking, you should pay your collections off eventually, but it's not a barrier for you to buying that home and you're already paying rent. So
It's not. And if you actually do have collections, it's really great to talk to a lender before you do anything, because in some cases it might be better for you not to necessarily pay the collections before purchasing a
That's right.
home. Especially if it's some really old thing, once you pay that and it becomes current again, it can really hurt your credit score.
Mm-hmm.
And it may not even need to be paid, which would give you more resources to put towards your down payment and closing costs.
Right. Another thing that happens with collections is that people go and seek out credit counseling, which, I think is great, but you have to talk to your lender first and then they can advise you on when the timing of that should be, because if you start with credit repair and then they start, going and calling and
Disputing
all the
accounts.
accounts, things, then you have an issue because you can't close a loan with accounts in dispute.
Right. So then you have to reverse all that and
Or wait till they're resolved, which is a minimum of 90 days,
yeah.
a minimum.
So
So yeah, again, these are things that we would talk through with you and then advise you on the next steps. The other thing is maybe your score is a little bit low to qualify.
right. So we can help you with that. We can all advise you on what you need to pay down, what you need to pay off, if anything. We have a great relationship with ARC, our credit reporting company, and we can tell you exactly what you should do in order to achieve a specific credit score that you're trying to get to.
Right. And sometimes it's, getting you just above, 620 so you can buy in conventional, or it's getting you to a 780 so you can get the best credit score or the best interest rate possible, best credit score and interest rate. So, but we can help you with that.
Yep.
Yep. And you can do all those things before you start house shopping. So you've just got, all your ducks in a row before you start
Yeah.
going out looking for a home.
Right. And another thing on that, in paying off things and the advice that we would give you, it would be very specific. So a lot of times people might think, oh, I have that $3,000 whatever, I need to pay that off. Well, maybe you only need to pay $2,000 of the $3,000 to achieve the goal, which saves you $1,000 again toward your
down payment.
So, it's really good to figure out exactly what you should do before you do it.
Yep. And then jumbo. We have come across, there are a lot in this market now, jumbo first-time home buyers. So jumbo requires a certain amount of trade lines, 3 open trade lines they have to be different types of trade lines. So at least one has to be an installment loan, which could be a home loan, previous home, if you're a first-time home buyer, you wouldn't have that, or an auto loan. And then they have to be active for 12 months and one has to be active for 24 months.
Yeah, it gets really, really picky,
Complicated.
really picky, really complicated. In the jumbo market, they have just such specific credit lines. You know, if you there's like option A, which Sarah just outlined. If you can't fit into option A, maybe, you know, sometimes people will have, I've seen reports where they have trade lines, but nothing is active, like they haven't been using their credit.
Right.
So you have to have active accounts, not just past credit history. And then if you don't have that number of 3 active trade lines, then maybe you can have more accounts, but then the jumbo guidelines are going to require you to have a better credit score, the lower minimum credit score, and also reserve requirements. So it's just in lending, it's just all about layers of risk. And so, you know, if you don't meet one guideline, sometimes there's something else that you can do, but it's probably going to require better and more of whatever.
Yeah, better and more. So the other thing I just thought of is that we've come across this too, is that being an authorized user on an account does not qualify you as actually being an account holder.
Right.
So it shows on your credit report, oh, you've got 3 accounts, you're great. But unless your lender is really digging in and looking at that, your credit report, they'll notice that you're actually just an authorized user and those were not opened in your name.
Yeah.
So that's great on a conventional loan to help you get credit history, because you get instant credit history for however long that, you know, the owner of that account has had that open. As long, it's good if it's positive, right? Positive history. But on jumbo financing, that doesn't fly. You have to have your own cards.
So if you've just, you know, your parents helped you and you were an authorized user and you've never actually established your own report, that's the kind of thing that people will think you're fine, and then all of a sudden you get to underwriting when you're in contract and they go, oh, this isn't going to work, you know. So those are just the things that you might not see. There's just, like I said, there's so many moving parts.
So many little nuances.
And we pre-underwrite. So what we do with our clients is we will gather everything and we can send their file. If it's, you know, if there are questions that we're, you know, concerns about it, we can send it through underwriting and get a pre-underwrite before they have a property. So we know exactly what's going on. Then that will also help you close a lot faster once you do find a house.
And you have no concern because your loan is approved.
It's approved.
Done. Stamp of approval.
Which will help you in this competitive market.
Yeah. And then the other thing, a couple other little things on nuances on credit is FHA. When you're going FHA, even if you're just one spouse is on the loan, this happens a lot of times because maybe one person's credit is lower, so you remove someone off the loan. If you're married, you still have to qualify with their debt. So you can use your credit score to qualify. You don't get to use their income, but you do have to qualify with their debt.
It's kind of a double negative whammy, really, but
Yeah.
you don't get the income, but you get the debt. But, you know, it's just something to be aware of.
Something. And then on conventionals,
You're
you
okay.
don't have to do that. So
Yeah, conventional one, whoever's on the loan, it's just their debt. Even if you're married, you don't have to qualify with your spouse's debt.
we
So,
generally go conventional. Most
Yeah.
cases,
If we-
always it's usually in the client's best interest. So if you are talking to a lender and they're talking about you're pushing you to FHA and showing you no other options, get another opinion. So that's really it. We just want to share that stuff with you. Hopefully that shed some light. You learned something. I don't know. You know, we've just realized that a lot of people think they're not ready to buy. We've had friends, they're not ready. We got them to take an application, and 2 months later, they bought a brand new house. So reach out to the Riley Johnson team. We
happy
would
to
love
answer
help you.
questions. Happy to answer.
Thank you so much for tuning in to Financial Fitness Northwest. We hope that you found the information valuable. To find out about our show or hear any topics discussed, you can find us online at www.financialfitnessnw.com.
Have a great weekend.
Talk to you next week.